Hello and welcome to myfinanceteacher.org. While I've been enjoying holidays over the last several weeks, the markets are going crazy. Gold is pushing 2470, while US dollar and the general stock market, S&P as well as NASDAQ, are dropping like a stone. So let's have a quick review of what's actually happening on the market, and much of what I'm going to talk about I have already discussed, as you see, with the members at myfinanceteacher.org. So for much more details and regular updates, make sure to join us. That's myfinanceteacher.org. Let's start with gold price. As I have discussed a couple of times over the last several weeks, there is probably 30% chance that the intermediate cycle in gold that started in mid-February over here has already completed around this question mark over here in late June, meaning that we are now in a new intermediate cycle, which would imply gold breaking above 2500 with a lot of conviction. But as I had previously mentioned to the members, there is probably only 30%, 35% chance for that, while 65-70% chance, that is a more likely scenario, is one more correction down in gold price into that more recognizable intermediate cycle low. Perhaps test this 200-day moving average before a new intermediate cycle rally takes place. Amongst the reasons for another push lower is that the intermediate cycle finishing in late June would be relatively short at only 133 days. That's not impossible, but it's not a very common occurrence either. Another reason is that back in June, the optics market sentiment hasn't really dropped much. Look at this optics over the last few years. During the good times, as in let's say 2021, intermediate cycle lows are accompanied by the optics dropping somewhere below the level of 50. During the hard times, as in say second half of 2022, intermediate cycle lows are accompanied by the optics dropping down to the level of 30. While at this recent late June low, the optics have only dropped down to the level of 66. Therefore, it's not extremely likely that we had seen that intermediate cycle low, although nothing is impossible, and we might have seen enough of a sideways correction rather than a correction down in price. More recently, we talked about what dollar tells us about the gold price going into the future. So looking at the dollar over here, back at the end of July, I was expecting one more push down in dollar, down into this more recognizable daily as well as intermediate cycle low. That's exactly what's been happening over the last few days, especially today. If dollar doesn't drop out of bed even further here, what we might see over the next few days is perhaps a bit of a positive divergence on RSI. That's a lower low on price versus a higher low on RSI, which usually indicates a bit of a turnaround in momentum from the downtrend to the uptrend. Plus, over the last few months, dollar has been respecting this declining channel. We see a breakdown, and if it's a false breakdown, that could be quite a nice and commonly observable bear trap. And of course, if dollar is ready to push, at least temporarily, into a new intermediate cycle rally, that might imply that gold is temporarily going to decline, maybe test this 200-day moving average, perhaps around the price of 22.20. So that's the quick review of precious metals as well as the US dollar. Let's look at the general stock market. We see S&P is dropping over the last couple of days. And while I had been holding a short position in the general stock market, to be honest, I was a little bit too early with that position, even though it was clear that the market was overvalued. What do we see here is that second break below the relatively wide Bollinger Bands. I think a nice buying opportunity in the general stock market might actually happen over the next several days. If you throw in this fib retracement levels, we see that the market is already at 50% retracement. As I mentioned many times in my previous videos, the most common retracements that we observe are the 38, 50 and 62% retracements. Hence, if the market doesn't bounce today, as I mentioned, we'll likely see a continuation down over the next several days, somewhere closer to that level of 62% retracement, or a retest of the previous intermediate cycle high, somewhere around 52.60 on S&P. Will that be only a daily cycle low, or will that be a more significant intermediate cycle low? That remains to be seen. We are in a second daily cycle of this ongoing intermediate cycle, which so far is only 105 days. That is a little short for an intermediate cycle low, but the severity of this correction might still imply that the intermediate cycle low is taking place, again as I mentioned, over the next several days, perhaps a couple of weeks. That's all for now. Enjoy your summer. When you get back to office, make sure to join us at myfinancesteacher.org. Simply scroll down a little and click this Join Now button. Have a fantastic Friday, wonderful weekend. Bye bye.